Welcome back to Investing Talk podcast.
Great to be here.
Today, we're taking a closer look at Ambarella, the semiconductor company. A lot of you have asked. Is Ambarella a good time to buy now?
That's the big question, isn't it? Especially with all the buzz around AI.
Exactly. Before we jump in, if you're finding our discussions helpful, please consider subscribing, liking, and leaving a comment. It really helps us out.
It absolutely does.
And if you want to support us further, maybe think about buying us a coffee. Also, if there's a specific company you'd like us to explore in the future, just leave a comment below.
We love getting those suggestions.
Okay, let's unpack this. We've gathered a lot of information on Ambarella, from their latest earnings, analyst reports, market sentiment, all of it.
It's a company at a really interesting point, isn't it? Doubling down on AI for cars and security.
It really is. But what does the immediate financial picture tell us right now? What are the recent numbers saying?
Well, what's fascinating here is how Ambarella is sort of navigating this transition, because the numbers for Q2 FY 2026, they show some clear headwinds.
Headwinds, okay.
Yeah, on the surface, they reported revenue of $45.2 million. That's for the period ending July 31st, 2025.
Right.
And that's actually a 12% decline year over year.
Compared to Q2 last fiscal year.
12%, that's pretty noticeable.
It is. And, despite a solid gross margin, 61.4%, which is quite good, tells you their core tech is profitable.
Okay.
They still recorded a net loss of $18.8 million. That works out to about 0.48 cents per share.
So profitable product, but overall loss. What's the story there?
Well, management points to inventory correction mainly. In the edge AI and automotive camera markets. That's been a theme across the sector, frankly.
Right, clearing out old stock.
Exactly. They've hinted at some early signs of things stabilizing, maybe customer pipelines expanding a bit. But it's crucial to note future earnings projections. Still pretty subdued.
So no quick bounce back expected. Not really. Q3 revenue guidance is between $45 and $49 million. And they're expecting a continued non-GAAP net loss, mostly because they're still investing heavily in R&D.
Okay, so on one hand, we see that revenue decline and the losses. That's a clear challenge, short term anyway.
Definitely.
But what about their overall financial health? I mean, are they burning through cash with no safety net? That's always a worry.
That brings us to a really important point, and this is where Ambarella, well, it shows some resilience.
Okay.
As of July 31st, 2025, they actually have a strong liquidity position. We're talking $235 million in cash equivalents, and marketable securities.
$235 million. Okay, that's a decent cushion.
It is. And importantly, zero long-term debt. None.
No debt. That's always good to see.
Absolutely. In a downturn, that's a significant buffer. It lets them weather the storm, keep investing. Now, operating cash flow for Q2, it was negative, about $16 million.
Right. Still burning cash then.
They are, but it seems intentional. They're deliberately pouring money into R&D. It speaks to a longer-term strategy.
Yeah.
Not necessarily financial distress.
So investing for that AI future.
Precisely. And if we connect this to the bigger picture, Ambarella is playing in that semiconductor space, right? Specifically, computer vision chips for AI.
The car and security focus.
Yep. Automotive and security cameras. Their niche, their real strength, is supposed to be energy-efficient AI compute.
Why is energy efficiency so key there?
Well, think about it. A security camera that's always on, or an electric car trying to maximize range. Every watt counts. Less power means longer battery life, less heat. It enables doing the AI on the device, the edge, instead of sending it all to the cloud.
Ah, okay. Faster processing, less data usage too.
Exactly. So that's their bet. They also have a strong IP portfolio, some key automotive partnerships, but, and it's a big but.
Competition.
Huge competition. We're talking NVIDIA, Qualcomm, giants. Much larger, way more capital.
So Ambarella's the smaller, specialized player.
Right. It limits their scale, their ability to absorb demand shocks compared to the big guys. They have to be really focused.
Okay, that's a complex picture. Revenue challenges, but a strong balance sheet and a clear AI strategy facing down giants. So given all that, how is the market actually valuing Ambarella right now?
Good question. From a valuation perspective, as of August 30th, 2025, Ambarella is trading at a price-to-sales multiple of roughly 7.3 times.
7.3. How does that compare?
Well, the semiconductor industry average PS is closer to 6.8x. So Ambarella is trading at a premium on a sales basis.
Meaning investors are paying more for each dollar of their sales compared to peers.
Exactly. It suggests the market is pricing in future growth, that AI potential we talked about, almost like a hope premium.
Interesting. What about other metrics? Price to book?
Their price-to-book ratio is about 2.1x. That's actually a discount compared to the industry average of around 3.1x.
So expensive on sales, cheaper on assets. How does that work?
It kind of suggests that while the sales multiple reflects future hope, the underlying book value is seen as more reasonable, maybe discounted, because they aren't profitable right now.
Makes sense. And price to earnings?
Well, PE isn't really meaningful here because they have negative earnings per share, those losses we mentioned.
Right. Can't divide by zero or less than zero. What are analysts saying? Price targets.
Consensus analyst price targets seem to be broadly in the, let's say, $55 to $65 range.
And where's the stock trading now?
Kind of near the low end of that range,
Where-
which again implies the stock is largely priced for a recovery. It's banking heavily on that long-term AI growth story playing out.
So the valuation reflects hope for the future, a forward-looking bet. But let's get down to brass tacks, the charts. For those of us who follow technicals, what are they telling us?
Okay, technically,
Yeah.
as of August 30th, Ambarella is trading in the 52 to 57 range here.
Okay.
The stock had that pretty noticeable sell-off back in late May, remember,
Mm,
after that disappointing earnings forecast.
right, it dropped quite a bit.
It did. And since then, it's basically consolidated above the $50 mark.
Yeah.
That $50 level seems to be acting as major support. Psychologically important too, probably.
So finding a floor around $50.
Appears so.
Uh-huh.
On the upside, resistance looks to be in the $58 to $60 range. It's struggled to push past that.
What about moving averages?
The 50-day moving average is hovering around $54 right now, acting as short-term resistance.
Okay.
And the 200-day moving average, that longer-term trend indicator, is up around $61. That confirms the longer-term downtrend is still, technically intact.
Downtrend still in place then? What about momentum, RSI?
The relative strength index, RSI, is pretty neutral,
Mhm.
around 44, so not particularly overbought, not particularly oversold, just kind of sitting there.
And volatility?
Interestingly, volatility has actually moderated a bit since that earnings drop in May. The big swings seem to have lessened. It looks like the stock is trying to form a base at these current levels.
Trying to find its footing. Any recent news or maybe upcoming events that could shake things up, give it some direction?
Yeah, absolutely. That August 28th earnings report was key. It confirmed the weak demand, but also, stabilizing demand. Management expressed some cautious optimism for the rest of the fiscal year.
Cautious optimism, the standard phrase sometimes.
It often is. Major analyst firms like Bernstein and Needham, they basically reiterated hold ratings recently, targets in the mid-$50.
So wait and see from the analysts too.
Pretty much.
Bro.
No major upgrades or downgrades in August, which tells you there's a sort of consensus of neutrality right now.
What about insiders? Buying, selling?
There were some small routine sales back in June. The COO and CTO sold about 1,600 shares each, around $52. But these look like planned sales, likely to cover tax obligations from stock units vesting.
Ah, okay. Not necessarily a negative signal then.
Generally not seen that way, no. In social media sentiment, also seems pretty neutral. People acknowledge the long-term AI story, but also the near-term hurdles.
Makes sense. So looking ahead, what are the potential catalysts, things that could move the needle?
Okay, short-term, the big one is probably the Q3 earnings release. Expected late November, that'll be critical for signs of revenue stabilizing or ideally improving.
Everyone will be watching that one.
Definitely. Also, any announcements of new design wins, especially big ones in automotive or industrial AI, that could provide a real boost.
Tangible progress.
Exactly. Long-term catalysts. It's really about the broader adoption of that AI edge compute stuff in cars and security. If that takes off like many expect, Ambarella could really benefit.
If their bet pays off.
Right. There's also, always the possibility of M&A interest. If these headwinds continue, a larger chip maker might find their specialized IP attractive.
A potential takeover target.
It's a possibility down the line.
Yeah.
And just continued progress on their product pipeline, partnerships with those tier 1 auto suppliers, all that is vital long-term.
Okay, so we've got potential catalysts, but what about the flip side? What are the biggest risks here? The hurdles Ambarella needs to clear for someone thinking about investing.
Right, the risks are significant. You've got stock-specific risks first, like sustained operating losses. They've had 4 straight quarters now of negative net income and negative operating cash flow.
4 quarters is starting to look like a trend.
It is. There's also customer concentration risk, relying heavily on just a few big customers. If one walks or cuts orders, it hurts.
Mm-hmm.
And that transition to AI, it might just be slower or more expensive than everyone hopes. That's a risk too.
And beyond Ambarella itself, sector risks.
Oh yeah. Semiconductor demand is cyclical, We could see a broader downturn. Yeah. Intense competition. We already mentioned NVIDIA, Qualcomm. They can squeeze margins.
Price wars, maybe.
Potentially.
Yeah.
And just general macroeconomic sensitivity, supply chains, inflation, all that can hit a company like Ambarella.
So putting it all together, the good, the bad, the potential, the risks.
Yeah.
What's the final assessment, the bottom line?
Overall, our investment gives Ambarella probably a 5 out of 10 rating right now.
A 5, right in the middle. Why?
Well, they show resilience, right? That liquidity, $235 million cash, no debt. That's good.
Yeah.
And their strategic ambition in edge AI is clear, and it's a promising market. Huge potential. But the persistent revenue contraction, the negative earnings, the ongoing cash burn, that really limits the near-term attractiveness. Plus, it's trading at that premium PS multiple.
So expensive for what it's delivering right now.
Kind of, yeah. For the stock price to really move up significantly, you need to see better execution, clear signs demand is bottoming, and a return to growth.
And the insider activity being neutral doesn't add much conviction either way.
Exactly. So the risk-return profile feels pretty balanced. You've got positive long-term optionality if the AI strategy works out.
The if.
The big if. But very little near-term momentum. It's that classic potential versus proof situation.
So who is this stock best suited for then?
Probably best suited for a long-term investor. Someone seeking speculative exposure to that future AI growth in edge markets, and someone who can tolerate, frankly, significant volatility and ongoing losses.
Not for the faint of heart or short-term traders.
Definitely not optimal for short-term trading, not unless a very specific catalyst pops up and momentum clearly shifts positive.
That's a very clear summary. It sounds like Ambarella really highlights that tension between, current struggles and future promise, especially in AI, which is so exciting, but so competitive.
Absolutely. It's not a simple story.
It really isn't. It's definitely not a straightforward buy or sell at this moment.
No, requires careful consideration.
So for you, the listener, the key takeaway here is to really consider your own investment horizon and your risk tolerance when you're looking at a company like Ambarella.
Yeah, that edge AI promise is huge, but the path to actually making consistent money from it can be, well, rocky.
Indeed. Now, here's a thought to maybe ponder. In a sector like AI that's evolving so rapidly, how much of a premium should an investor really place on a company's strategic vision and its intellectual property when its current financials show consistent losses?
That's the multi-million-dollar question, isn't it?
It really is. What do you think is the critical turning point for a company like Ambarella to go from being, a speculative play to maybe a more stable growth story? Is it profitability, consistent revenue growth, market share gains?
It's a likely combination, but seeing that revenue line consistently tick up again and maybe a clear path to positive cash flow, that would probably be key for many investors.
Food for thought. Thank you for joining us for this exploration of Ambarella. We hope it helps you make more informed decisions.
I hope so, too.
We'll be back soon with another company analysis.